Hey, so we just wrapped up our mid-year company retreat, but we cannot forget about your weekly market updates. The US stock market had a strong week with the S&P 500 and the Nasdaq reaching new record highs. This was driven by big gains in technology, especially with companies like Nvidia and Microsoft. Now, the job market remains solid. There was 147,000 jobs that were added in June, and the unemployment rate eased to about 4.1%. Now, this is good, but there's still some caution with consumer spending. It pulled back slightly in May. This means that people are just being cautious with their overall spending. Now, believe it or not, inflation is actually steady, and the Federal Reserve has indicated that two more interest rate cuts are likely this year to happen, with some expecting a third starting as early as September. Now, there was a big bill that was officially signed into law this month. It's called the One Big Beautiful Bill. What it brings is sweeping tax cuts, increased federal spending, and new regulatory changes. Now, this could be fuel for future growth, but there are some concerns that some people have that this brings rising deficits and long-term economic risks. There are some new changes. There are new 50% tariffs on things like copper and Brazilian goods. But regardless of that, the stock market actually stayed resilient thanks to strong earnings and stable bond demand. Now, with major policy shifts just like this, it's now locked in. This will impact things like tax brackets, deductions, capital gains, and if you own a small business, you as well. This is the time to sit down with your financial advisor, whether it's planning for taxes, adjusting your investments, or preparing for potential rate cuts. The second half of this year is full of opportunities, but it's also full of risks. Don't wait. Proactive planning today can help you make smarter and better decisions for tomorrow.